The Minority Market. Episode 25. Identifying Competitive Advantage in Simple Terms. Most people choose stocks by looking at recent performance, popular names, or social media hype. Very few stop to ask the most important question: why does this business deserve to survive and grow in the long term? This question leads to the concept of competitive advantage. You do not need complex financial models to understand it. Competitive advantage simply means a company has something that makes it difficult for others to replace, copy, or defeat. Think about your daily life. Why do you keep buying from the same brand again and again? Why do you trust certain services more than others? Why do some businesses stay strong even when new competitors enter the market? The answers to these questions reveal competitive advantage. It could be trust, habit, cost efficiency, network strength, brand power, technology, or control over resources. One of the strongest advantages is customer loyalty. When people emotionally connect with a brand, price becomes less important. They return again and again, even when cheaper alternatives exist. This loyalty creates stable revenue and protects the business during difficult times. The minority looks for companies that customers choose not because they are forced to, but because they want to. Another form of advantage is cost leadership. Some companies can produce goods or services at lower costs than competitors. This allows them to survive price wars, maintain profit margins, and expand aggressively. When a business can operate profitably even during economic slowdowns, it gains long-term strength. The minority values efficiency more than flashy growth. Network effects are another powerful advantage. This happens when a product becomes more valuable as more people use it. Think of platforms where buyers attract sellers and sellers attract buyers. Once a network becomes dominant, it becomes extremely difficult for new competitors to break in. The minority understands that businesses with strong network effects often build long-lasting dominance. Control over distribution is also a hidden advantage. Some companies own supply chains, logistics systems, or exclusive partnerships. This gives them speed, reliability, and bargaining power. While others struggle with delays and rising costs, these companies operate smoothly. The minority pays attention to how a business delivers its product, not just what it sells. Technology and intellectual property can create strong protection as well. When a company owns patents, unique processes, or specialized knowledge, competitors cannot easily replicate its products. However, the minority also knows that technology alone is not enough. True advantage comes when innovation is combined with strong execution and customer trust. Brand power is often misunderstood. It is not about popularity alone. It is about perception. When customers associate a brand with quality, reliability, or status, the company gains pricing power. This allows higher margins and stable demand. The minority looks beyond marketing noise and evaluates whether the brand genuinely influences customer behavior. Competitive advantage is not permanent. Markets evolve. Consumer preferences change. New technologies disrupt industries. The minority does not blindly assume a company will remain strong forever. Instead, they observe whether the company is adapting, investing in the future, and defending its position. A strong advantage today must be maintained tomorrow. Beginners often confuse temporary success with real advantage. A company may show rapid growth due to a trend or temporary demand spike. This does not automatically mean it has long-term strength. The minority asks deeper questions. Is this growth sustainable? Can competitors easily enter this space? Does this business depend heavily on one product or one market? Another important concept is switching cost. When it is difficult or inconvenient for customers to change providers, businesses gain stability. This could be due to contracts, learning curves, data storage, ecosystem dependence, or integration into daily operations. The minority values businesses that become deeply embedded in customer routines. Here is a simple exercise to train your thinking. Choose any company you are interested in. Ask yourself 3 questions. Why do customers choose this business instead of others? What would make customers leave? And how easy is it for a new competitor to enter this market? If you struggle to answer these questions clearly, you probably do not understand the business well enough yet. Understanding competitive advantage also improves emotional control. When you invest in businesses with strong foundations, you are less likely to panic during market volatility. You trust the underlying strength instead of reacting to short-term price movement. This mental stability is one of the biggest benefits of long-term thinking. The minority does not chase excitement. They search for durability. They look for businesses that can survive recessions, adapt to change, and continue serving customers for decades. This approach does not create overnight wealth, but it builds steady, compounding growth over time. Remember, stock prices change every second. Competitive advantage develops over years. When you focus on long-term strength instead of short-term noise, you align your mindset with sustainable success. This is how you slowly separate yourself from the emotional crowd. As you continue building your foundation with the minority market, keep training your observation skills. Look beyond charts. Look beyond headlines. Look at the real engine behind businesses. When you learn to identify true competitive advantage, you stop gambling and start investing with clarity and confidence.